You send money to someone at another bank. You get a notification that says, transfer successful, but the money doesn't actually move instantly. So what really happens after you press send? And why do bank transfers sometimes fail, delay, or disappear for days? Let's break it down. When you transfer money to another bank, your bank does not send physical cash. It doesn't even send digital cash. What it sends is a message, a secure message that says, this account wants to send this amount to that account. Your bank immediately reduces your balance, but the receiving bank has not received the money yet. At this stage, the money is in transit. Here's the key thing most people don't know. Banks do not talk to each other directly, one by one. They use intermediary systems. These are shared networks that sit between banks and coordinate transfers. Think of them like air traffic control for money. They make sure transactions are logged, verified, and settled correctly. Depending on the country, this system could be a national payment switch, a clearinghouse, or a central bank control network. Your transfer enters this system and waits its turn. This process is called clearing. Clearing is where the system checks. Is the sender real? Is the amount valid? Are there duplicate or suspicious transactions? Do both banks agree on the transaction details? Only after this does settlement happen. Settlement is when money officially changes ownership between banks. Not between people, between banks. Banks don't keep all customer money in separate piles. They keep pooled funds and adjust balances between themselves. So when settlement happens, bank now owes less and bank B owes more. Then, and only then, does the receiving bank credit the other person. So why does this sometimes take hours or days? Because most banking systems do batch processing. That means transfers are grouped together and processed at specific times. If you send money after the cutoff time, it waits until the next cycle. Weekends and public holidays make this worse. The system isn't broken. It's just not instant. Now, let's talk about failures. Transfers fail for three main reasons. First, network or system issues. If any system in the chain goes offline, the transfer pauses. Your bank may mark it as sent, but settlement hasn't happened yet. This is where delays come from. Second, verification and security checks. If a transaction looks unusual, wrong pattern, large amount, new account, it may be flagged. The system pauses it for review. This protects against fraud, but it also causes frustration. Third, reconciliation errors. Sometimes banks disagree. One system says money moved. Another says it didn't. When this happens, everything stops. Banks then compare logs, timestamps, and transaction IDs to resolve it. This is why refunds can take days. Here's the important part. Money rarely disappears. It gets stuck between systems. Every step is logged. Every message is recorded. Eventually, the system reconciles and corrects itself. That's why delayed transfers usually arrive or reverse, not vanish. So remember this. When you send money between banks, you're not moving cash. You're triggering a multi-layered system of messages, checks, clearing, and settlement. Speed depends on the network. Failures come from protection, not incompetence. And delays are often the system doing exactly what it was designed to do. If you understand this, banking suddenly feels less mysterious and less stressful. If you want to understand how everyday systems really work, subscribe to this channel. Next, we'll break down why banks sometimes block accounts and what actually happens behind the scenes.